Hello everyone. It's that time of year when we need to choose or select our health insurance plans for the next year. So it's open enrollment where I work. So I thought it'd be helpful to basically think out loud and go through how I select the healthcare plan or the option for my family and what I think about when I do that. So here we go. So this here are my choices. So I have 5 choices. They're all Blue Cross Blue Shield plans or Florida Blue, but I have to select the plan that is best for my family among these 5. So I'm going to kind of walk through and explain each of these things because I know it can be kind of confusing. So the 3 big things that you need to understand that I think influence cost the most, your out-of-pocket cost and how much your premiums cost and whatnot, have to do with your deductible, your coinsurance, and your maximum out-of-pocket. So let's talk about those because I think the coinsurance ends up freaking a lot of people out. They see 30% coinsurance and they're like, 30% of what? 30% of $100 isn't a whole lot. 30% of $50,000 is a lot. The good news is eventually you're going to hit your maximum out-of-pocket, which means it doesn't matter what this coinsurance ends up being. The maximum amount you'd have to spend out of pocket for the entire year is the maximum out of pocket. So, for example, in this particular plan, the calendar year deductible is $3,000 for an individual or $6,000 for a family. It's an aggregate, which means that the insurance company doesn't pay anything until you've hit this amount. So I'm looking to buy insurance for a family of 4, my wife and 2 kids, and the insurance company's not going to pay a single dollar towards anything until we hit $6,000 together for the year. So that is our deductible that we have to meet, our calendar year deductible, and it's an aggregate, which means that before the insurance company pays anything, the sum of all of our expenses needs to exceed $6,000. In this case, it's embedded over in this plan, which means for an individual it's $5,500, so it doesn't really matter whether it's embedded or aggregate for an individual because it's just one person. For a family, it's $11,000. So what that means is that each individual needs to hit their deductible before the plan picks it up. So that can be good if it's one person in the family that consumes all the healthcare costs, because if it were embedded over here, as soon as one of the 4 of people in my family hit this number, then they would start picking up the costs for that person. So it just depends on the number, basically. So the embedded means it's each individual has their own deductible. Aggregate means it's a shared deductible before the insurance company kicks in. That's essentially what that means. Coinsurance is the amount that you pay along with the insurance company after your deductible's met. And I'm going to go into that in a lot of detail because I think that's the most confusing thing. Maximum out of pocket is the most you'd have to spend out of pocket for a year. So since I have a family of 4, we would be this number if I selected this plan, which I'm not. But if I did, I would have to spend up to a maximum of $13,100 out of pocket next year. At that point, it doesn't matter. The insurance company's picking up the rest. But before the insurance company pays anything, I need to beat my deductible. So that's kind of how it works. So I know that at a minimum, I'm going to spend this much as a family next year. That's my calendar year deductible. And as a maximum, I'm going to have to spend that much with this plan. So, for example, let's just go through each of these and then I'll dig into the whole coinsurance thing. So if you go to an in-network provider, what that means is it's a group of providers that are accepted within your plan versus an out-of-network provider, which this plan does not have any out-of-network benefits because it's an HMO. But out-of-network means if you do go to a physician or hospital or facility that is not part of this plan, that the insurance company is not going to pay anything. And whatever you do pay that out-of-network provider does not count towards your deductible or your maximum out-of-pocket for the year. So if you go to an in-network, this plan only has in-network benefits. So this is basically summarizing what your calendar year deductible is, your coinsurance, and your maximum out-of-pocket for this plan for in-network providers. Office services, so say you go to your regular primary care doctor and you're doing what's called a level 4 or a level 5 visit, you basically are going to have to pay your calendar year deductible plus 30%. So in general, the cost of that visit is probably going to be somewhere between $200 and $500. Where it's going to get adjusted is your allowable. So let's actually go ahead and talk about that now. So this is an example. So this sort of breaks down your deductible. The insurance company sets the allowable, and there's no way that you can know what this is. It's not transparent. And your co-insurance is a percentage of that. So say you have a procedure done and it's with me and I take your insurance. So I take Florida Blue, and there's a couple plans within Florida Blue that we do not take, but most likely if you have Florida Blue, we take it. You can see the list of insurance plans we take on our website or call us. But I digress. So say I do a procedure on you and it's $10,000 is what I bill. It doesn't matter what I bill because I am in network and I have an allowable. So the insurance company has negotiated with my management company to say, we don't care what you want for that procedure. Our allowable is only $5,000. So if you have a $1,000 deductible, you'd have to first pay that, and then 20% of this allowable. So 20% of what's left is $800, and then the insurance company would pay this much. If your deductible is higher, this bar is going to move up, and you're going to spend more on a deductible, and still your co-insurance. Your co-insurance doesn't stop until you've hit your out-of-pocket maximum. So if my deductible is $10,000 for my family, and we have no expenses, all of a sudden I go get surgery and it costs $10,000, well, basically I'm going to pay that entire fee out of pocket because I haven't met my deductible yet. So think of it as the deductible goes first, your co-insurance is a percentage of what the allowable is, and you keep paying your co-insurance until you've hit your out-of-pocket maximum. So deductible goes away first, co-insurance goes away second until you've hit your annual out-of-pocket maximum. So let's go back here. So you go to a primary care doctor visit, you're going to pay your deductible first plus 30% co-insurance, which is what that number is, until you've hit your out-of-pocket maximum. Again, office visits are usually $200 to $500. If you have a procedure performed or a test performed or anything like that, it's going to go up. But the fee for just the talking and thinking and paperwork involved with it is probably $200 to $500. Specialist visits, same thing. They may be a little bit more expensive, but in general, the cost of an office visit that only involves thinking and talking and examining you and answering your questions and prescribing things or ordering things, that's going to be probably $200 to $500. Hospital services, this is where things can get out of control, and this is why you really have insurance when you think about it. And same thing with the emergency room visits. So what gets expensive here is your insurance company is going to decide what the negotiated rate is or what the allowable is for whatever it is you have done. But if you go into the ER, you're going to pay for the emergency physician's professional fee, which is a small portion of your total bill. You're going to pay for any tests you had done, CT scans, lab work, all that stuff's going to be billed separately. Any supplies you use or consume is going to be billed separately. Any procedures you have done are a separate code, and so that's where your 30% could be 30% of a big number, but thank God there's a ceiling or your maximum out of pocket that would be the limit of what it would be. Independent diagnostic testing, this would be if you weren't in a hospital or an ER and you went somewhere else to have tests done or labs done. Mental health services, pharmacy. So what this means is after your deductible is consumed, you're going to pay a $10 copay, a $50 copay, or an $80 copay, depending if it's generic, brand, or non-preferred for your medications. That's what that means. So, for example, I have asthma, and my wife has epilepsy, and one of my sons has autism. So all the medications are quite expensive when you add it all up. So initially when we go to the pharmacy in January, February, March, early in the year, the people checking us out give us this funny look saying, you realize how much this costs? And we say, yes, we know, we haven't hit our deductible yet. And as soon as our family deductible gets hit, then we only pay the copay on those prescriptions. But before that, we got to pay out our deductible before the insurance company pays anything. So don't get mad when you go to your pharmacy or go to your doctor's office and you haven't met your deductible if you have to pay for the entire cost of everything out of pocket, because that's what a deductible is. The insurance company doesn't pay anything until your deductible has been met first. And then you share costs with the insurance company with this whole co-insurance thing until your maximum out of pocket is hit or met. And so that's kind of how this works in summary. So now I'll explain to you why I'm choosing the plan I'm choosing. So in general, HMOs, these four things have no out-of-network benefits. And so the insurance companies usually charge a lower premium for them because of that. So I'm going to select the PPO HSA plan for my family, and I'll explain why, because we want out of network benefits. The reason we want out of network benefits is if one of us had to go somewhere and have an expensive procedure performed or an expensive hospitalization, we would want the out-of-network benefits to pay for that. And what that would mean is the out-of-network deductible is higher. So for a family, it's $10,000. Co-insurance is higher, it's 40%, but the maximum out-of-pocket is $23,200 for a family. So that's the reason I select this, is I just want to have the option to see whichever doctors or facility or hospital we want to go to. So that's one of the main reasons I select this. The deductible is $5,000 for a family. Our co-insurance is 20% when we're in network, and the maximum out of pocket that we'd have to spend is $11,600. What this middle number is here is for an individual within the family. So it's an aggregate deductible. So in other words, our deductible as a family isn't met until we've all spent $5,000 together. In other words, the first $5,000 of our annual healthcare expenses are out of our pocket. What this maximum out of pocket means is, let's say that I'm wakeboarding or something and I hurt my knee and I have to have surgery. Well, that's going to definitely run my deductible cashed out. Our family deductible get cashed out by that, and then the 20% co-insurance of an in-network provider is going to run it up to this number. So this middle number is the maximum out-of-pocket for an individual, and this is for the whole family. So it's confusing. So this is the individual if you only insured yourself. This is the out-of-pocket maximum for an individual of the family insurance plan. So that's all that means. I'm not going to dwell on it. It's a minor detail. So let's say I hurt my knee and I have to have surgery. So the first question is what's it going to cost? And if you want to try and predict what these things would cost, here's what you do. You go to Google and you Google CPT code knee arthroscopy or whatever procedure you're interested in. So it's going to tell you that the CPT code for a knee arthroscopy, you could open this up, but I'm just going to use this one for example, 29881. So every procedure has a code. Then you go to fairhealthconsumer.org, click medical, and say you're going in your network. All right, I'm going to stay in my network. I have an orthopedic surgeon I like in my network. That's weird. All right, so then I'm going to enter the CPT code that I want to search for. So you basically enter your zip code, enter your CPT code, hit search. Yeah, I agree. Removal of knee cartilage using an endoscope. Sure, that's what we want to know. So what are my costs? So in-network price they think is this. Out-of-network uninsured price would be this. Related costs. So this is what matters. So this is the orthopedic surgeon's fee. So don't get mad. Your orthopedic surgeon, if you're in network, is only going to make $1,000 to scope your knee. I think my electrician and plumber charge more than that. So the anesthesia costs and the hospital costs are where you need insurance. In general, for the professional fee to the doctor or the surgeon, I will tell you that most doctors want to profit or take home between $200 and $500 an hour, which means they have to collect twice that in order to cover all the costs of running a medical office and a practice and the staff and the malpractice insurance and the supplies and the rent and the utilities and all the things that go into running a medical business are usually the overhead or the expenses are 50% for most doctors. So what I'm saying is if I want to make $500 an hour, I need to generate or collect $1,000 an hour so I can take home $500 an hour. So that's a ballpark. Almost any doctor, if you want to just pay him cash, would take $500 to $1,000 an hour for their time in general. So if the orthopedic surgeon is going to spend an hour doing my knee scope, all the paperwork and all the clinic visits associated with it, it's probably going to take longer than that when you consider all the time involved. It's not surprising the in-network rate's $1,000, and so that's that. But that's not what's expensive about healthcare. What's expensive are the facility fee charges, which that is what gets high. So the total cost would be $10,000. So what's going to happen if I need to have it done, a knee scope done, and the total cost is $10,000, I'm first going to cash out my family's deductible, and then I'm going to pay up to this number here, and then the insurance company is going to pick up the rest. Because I'm going to have to pay for 20% of that $10,000 in addition to my deductible up until this number hits here, or as a group for my family there. So that is how you can estimate what your out-of-pocket costs would be and how much you need to sort of save and budget for. So what that would be an outpatient hospital surgery. So calendar year deductible for me would be met with option one, $5,000, and then 20% coinsurance of $10,000, which would be another $2,000, which is going to hit this ceiling before it reaches $7,000. And then after that, I will not pay anything for healthcare once I've met this out-of-pocket maximum as an individual or this as a family. Then the insurance company's picking up the whole tab. So moving on down, we talked about what a primary care office visit is, inpatient hospital visit, your deductible plus a coinsurance percentage until you hit your out-of-pocket maximum. Emergency room visit, same thing. So in general, don't stress out about the coinsurance percentage. Look at what your out-of-pocket maximum is. Because as soon as you have something big enough happen to you or you need expensive levels of health care, you're going to run your coinsurance. That percentage is going to run up to your maximum out-of-pocket pretty fast. So that's really what you want to pay attention to, and don't stress out too much about the coinsurance. When you're out of network, it's a little bit worse. Obviously, it's a 40% coinsurance until you hit the maximum out-of-pocket as a family of $23,000. So one thing on the same note is my wife sees a neurologist out of town. I don't know if that neurologist is in or out of network. And my son with autism sees a pediatric psychiatrist that is out of network with all insurance plans. That doesn't necessarily mean I should get this plan with out-of-network benefits, because both of those out-of-network services are physician office visits. And like I said, that's not super expensive. That I know out-of-pocket would be $200 to $500 an hour for those office visits. Where it gets expensive is when they have to have tests done, hospitalizations, and surgery. That's when it gets expensive. And the neurologist is not going to do surgery, and a pediatric psychiatrist is not going to do surgery, and neither of them are going to order very expensive tests. And if they do order those tests, I could probably have my wife or son go to a facility that is in network to get those tests done. Here we go. Diagnostic testing, that kind of thing in network. So just because you plan on seeing an out-of-network provider or you need to doesn't necessarily mean it's worth having out-of-network benefits. It depends on what is out-of-network. Where it would matter the most is if you wanted to have surgery or an expensive test done at an out-of-network facility. That is what's going to drive up your costs. So keep that in mind. It's the facility fees that get really expensive, and that's really what you need to insure yourself against. each of these plans has a different premium. So in general, the more risk the insurance company takes, the more expensive your premium is going to be. And the less risk the insurance company takes, the lower your premium is going to be. So there's no right answer to this question. That's why you're given choices, or most of you, I hope, are given choices when selecting your health insurance plan. But when you take a look at it, if the insurance company's on the hook for a higher deductible, I take that back. If your deductible is lower and your out-of-pocket maximum is lower, in other words, the insurance company's picking up more of the expenses, your premium is probably going to be higher. If your deductible is high, your co-insurance is high, and your maximum out-of-pocket is high, which makes the insurance company less likely to have to pay out claims, your premiums will be lower. So that is just a decision that you have to make. If you only had a crystal ball and you could know what was going to happen to you and your family the next year, it'd be a lot easier to make that decision. But that's why we have insurance, because it's to insure us against things we can't plan for. And so you just have to have an idea what's best for you regarding what your likelihood of requiring medical expenses will be next year, and then use that likelihood combined with the deductible, maximum out of pocket, and the cost of your premium to decide which plan is best for you. Another topic I will mention is the health reimbursement account, flexible savings account, or FSA. I'm going to do that in a separate video because this is getting kind of long. If you have any questions, please check out our website, restoreplasticsurgery.com. If you go to the blog page, there is a recording button there where you basically can leave a voice recording of your question and I can play it on the next podcast. If you've listened to this on the podcast and you want more visuals, please check out the YouTube video so you can see what I was pointing at and referring to the whole time. And don't forget to subscribe to our YouTube channel. If you're listening to this as a podcast, please subscribe to the podcast so you don't miss any episodes, and give us a 5-star review in iTunes so other people can find the podcast. And follow me on Facebook and Instagram at Restore Plastic Surgery.